So you've got some extra money and you're wondering where to put it to work. The question is, should you throw it into the stock market or buy a rental property? A big part of my adult life has been buying houses with a group of partners and then renting them out to families in need. And on the other side, we've got the stock market. Well, when you buy a house, you're buying a physical asset that you plan to keep for a while. If your goal is monthly income, real estate can offer immediate cash flow. Rent payments minus expenses, but it requires more work. Tenants, maintenance, vacancies. With stocks, especially dividend-paying ones, income is more passive, but often smaller early on. Which one does better during inflationary times? Well, real estate and stocks both have strengths during inflation. For example, I personally have roughly 60% of my portfolio in stocks and 40% in real estate. Does buying a rental property align with your lifestyle and values? Are you ready to handle the responsibilities of being a landlord? Or if you're a hands-on landlord who enjoys fixing up properties and building relationships with tenants, rental properties could be a great fit. And if you're a fire chaser looking to grow your wealth as quickly as possible, a hybrid approach might be ideal. Or do you prefer the more passive nature of stock market investing? How much time and effort are you willing to dedicate to managing a rental property? The best strategy is the one aligned with your unique circumstances, goals, and comfort levels. Personally, I love both because they provide different benefits and help me reach different financial milestones. As always, remember that investing involves risk, and past performance is not indicative of future results. Diversification is key, and it's important to have a long-term perspective. Don't panic if the market takes a dip. Stay focused on your financial goals and ride out the fluctuations. Are you okay with the risk and potential volatility of the stock market? If you want more smart investing breakdowns like this, hit subscribe and let me know in the comments. Are you team stocks, team real estate, or team both? Thanks for watching and see you in the next video. Remember, stocks can drop in value, but historically have recovered over the long term. And finally, do you need the monthly income right now? Or can you wait for the potential long-term growth of your investments? These questions will help you determine what's right for you. Stocks provide liquidity and long-term growth potential. Real estate offers cash flow and stability. Tools like REITs or fractional real estate platforms even let you blend both in one portfolio. Real estate rents often rise with inflation, and the property value may increase too. With stocks, companies can raise prices, pass on costs, and grow revenue, especially in sectors like energy and consumer goods. So again, it depends on what you're looking for. However, stocks often appreciate faster, historically averaging 8 to 10% per year. And just like stocks, its value will fluctuate based on supply and demand in your local area. Right? Well, real estate has major tax advantages. You can depreciate the property, meaning you can shelter rental income with losses. Well, stocks are super liquid. You can sell them with a tap of a button. Real estate, not so much. Selling a property can take weeks or even months and costs more to sell. Stocks are also more volatile. Your portfolio can drop 20% in a month. Real estate tends to move slower and offers stability, especially in rental-heavy markets. So which one is better? Well, that depends on your personal preferences and risk tolerance. You can also do a 1031 exchange to defer capital gains. That's when you sell the property and reinvest the money into another property without having to pay taxes on it. Mortgage interest is also deductible. Now with stocks, tax-advantaged accounts like Roth IRAs or TFSAs let you invest tax-free or tax-deferred. Bottom line, both can be tax-efficient depending on how you structure your investment. Now, there are a few different ways you can invest in real estate. You can buy a home, fix it up, and live in it yourself, or you can buy it as a vacation home. Or you can buy it as a rental property. So the first option is to live in the home yourself. This is the same as if you were to buy any other item, right? You're paying a price for something that you use on a regular basis. For example, if you decided to buy a brand new TV, Your payment would be the price of the TV divided by the number of hours you plan to watch it. So the more hours you watch it, the lower the cost per hour. Same thing with a home, right? If you pay the price for the home divided by how many hours you plan to live in it. And obviously, the longer you live in the home, the lower the cost per hour. But this isn't the type of real estate investment we're talking about today. We're talking about generating cash flow and building wealth, which leads us to our next option. You can buy a house as a vacation home that you and your family use on a regular basis. In this case, you're basically buying the experience of going on vacation. So, for example, if you bought a beach house and you visit 3 times a year, your payment would be the price of the house divided by 3 visits. So again, the more you use it, the lower the cost per visit. Now, although this is a great way to spend money on things you enjoy, it's still not really an investment that generates cash flow or builds wealth. Again, it's just buying the experience. So the only option left for true wealth building is buying a house as a rental property. A rental property is essentially a business. You buy a house and you rent it out to someone else who pays you rent every month. Then you use that money to cover expenses like repairs, property management fees, mortgage payments, and taxes. Whatever is left over is your profit. For years, I built a portfolio of hundreds of companies, some of which you might even recognize. I just love both because they provide different benefits that help you reach different financial milestones. So, in today's video, I'm going to dive deep into the 2 different paths, share the pros and cons of each, and hopefully by the end, help you decide which one is right for you. Let's get into it. Because at the end of the day, you're just trying to make money. So why not pick the fastest way possible, right? Well, here's the thing. There is no single right answer. Even though I have made a lot of money doing both, I can tell you that each path is completely different. And ultimately, it depends on you and what you want to accomplish. On one hand, we've got rental real estate. Let's start off with the basics. How do these investments actually work, and how can you tell if one is better than the other? Well, with stocks, when you buy a share of a company, you're technically buying a tiny piece of ownership in that business. That means you betting that company will grow and that your slice of ownership will increase in value over time. When a company does well, their stock tends to go up, and when they don't, it tends to go down. And although you don't always make money right away, historically speaking, the stock market has gone up every single year. On top of that, most companies share a portion of their profits with shareholders through these payments called dividends. Now, there are a few ways you can invest in the stock market. Some people buy individual stocks, but most people, including myself, prefer to spread their money around by buying index funds. Index funds allow you to buy thousands of stocks all at once. That way, you don't have to worry about picking individual winners. And since the vast majority of people aren't stock pickers, it gives you a chance of keeping up with the market. Now, what about real estate? What exactly makes real estate go up or down in value? Now that we understand how these investments work, let's dig into the real pros and cons. First up, we've got cash flow versus appreciation. Next up, we've got taxes. Everyone loves to pay taxes. Next up, we've got liquidity and risk, which is safer. And last but not least, we've got inflation hedging. The reality is, you don't have to choose one or the other. Many investors build hybrid portfolios. They hold a mix of stocks and real estate. So, now that you know the facts, it's time to ask yourself some important questions. For example, if you read a busy 9-to-5R who wants passive income but doesn't have the time to manage tenants, stocks might be the better choice. So there you have it. Both stocks and real estate can build serious wealth. I hope this video was helpful.